Hey guys, let's look at the 1957 letter that Warren Buffett wrote to his limited partners. This is from his Buffett Partnership days. It starts off by talking about how his view of the general market is that it is priced above intrinsic value. What he's saying in this paragraph is that market in 1957 was overvalued. Then he describes the activities of what he would do if the market were to go down and if it were to go up. And what he's saying is that if the market were to return to its undervalued status, so if there was a sell-off, he would buy more. And conversely, if the market were to go higher, then he would take out some profits. So what he's describing here is the buy low, sell high concept. He also talks about how the primary attention is given at all times to the detection of substantially undervalued securities. And he just wanted to clarify with his partners that he's not a market analyst. He's not making predictions of any kind. His goal is still to detect and find undervalued securities and invest in them. Buffett then says that it appears to me that the decline in the stock price has been considerably less than the decline in corporate earning power under present business condition. This means that the public is still very bullish on the blue chip stocks and the general economic picture. And what he's saying here is that the stock market is high despite bleak economic picture. And this is comparable to 2020 when the economy shut down and the corporate earnings declined drastically, and yet we see a stock market that is going higher and higher every day. So it looks like Buffett ran into the same situation back in 1957. And then Buffett goes into detail about his activities as far as his portfolio goes back in 1957. He describes what a workout is to his partners, where he says a workout is an investment which is dependent on a specific corporate action for its profit rather than a general advance in the price of the stock, as in the case of undervalued situations. Workouts come about through sales, mergers, liquidations, tenders, etc. And what he's describing here is similar to his cigar butt approach, where there's still one free puff left in that security, in that asset, and he's willing to take it and work it out. So that is what Buffett's definition is of a workout. Next, he talks about two investments. One of them takes up between 10 and 20% of the portfolio, and the other one takes up about 5%. And he says that both of these will probably take in the neighborhood of 3 to 5 years of work before he can reap the return on them. What he's conveying is that he has a concentrated portfolio with a long time horizon. Then as far as the results of 1957 go, he compares how his portfolio did to the Dow Jones Industrial Average. He talks about how if one had invested in the averages, the overall losses would have been about 8.47% for the year, and that investors would have lost money if they had invested in the Dow Jones Industrial Index. The three partnerships in 1957 had a gain of 6.2%, 7.8%, and 25% respectively, and it describes about how the third partnership was formed towards the bottom of the market, so it has a greater return, even though all of them have the same securities as far as investments go. Buffett then talks about how over the years he will be quite satisfied with a performance that is 10% per year above the averages. Interpretation of the results. Over here, Buffett wants to beat the market returns during bear markets and wants to match the returns during bull markets. Next, Buffett talks about how he intends to increase his largest position even further. Patience is the key when increasing portfolio allocation, and that it is important to increase the holdings when stock price is declining, as it increases your margin of safety. Now let's look at the key takeaways from this 1957 letter. First is stock market can lose correlation with economic conditions. Second is to buy low, sell high. Third is building a concentrated portfolio with a long time horizon. And lastly, have patience and increase the portfolio allocations towards a security when its prices are declining rather than when they're advancing. That is all I had for you guys this week. This was the letter from 1957 that Warren Buffett wrote to his limited partners. Hopefully you guys like this video. Please do like, share, and subscribe. Thanks.